I was very enthusiastic about John Flannery. Bob knows him better than I do. I knew him when he was a last-minute substitute at a big event we were doing in India for Jeff Immelt. And, of course, we were disappointed because of all the Indian titans there. And, in fact, what I saw him do before my very eyes on a cold call, he closed a multi-billion-dollar deal with one of India's largest companies, and he had basically just parachuted in there. This was before he moved into healthcare. And I thought he's a very smart guy. I think something that perhaps Bob could speak to, I think there has something to do with atmospherics here, is Flannery he might come off as sluggish, almost kind of academic seeming, and that he's not the most sort of charismatic, backslapping sorts. I think there's more of a dynamism, personal dynamism to Culp and to Horton. They're fabulous guys. But John is a very good, honest person, and I think that his plan analytically is pretty close to what's here. I would not jump overboard, as some people on this network did earlier this morning, giving Nelson Peltz and Treon any credit for this kind of move. Nelson Peltz bought, people should remember, into GE when the stock price was about 4 times what it is right now, and endorsed that strategy of Jeff Immelt. Every move that Jeff made, Nelson supported publicly, and I think that what's happening here is the board itself has come to some conclusion. There was some pressure from analysts, but not from activists, to make this move happen. And it's a shame. You look at Danaher. A lot of Danaher got reinvented.
Danaher Jeff, why is it a shame? Why is it a shame?
Well, it's a shame to have this kind of disruption. If they didn't pick the right guy 13 months ago, it's a shame, David. Is the fact that they felt they needed to make a move, and we have a pop in the stock strictly on atmospherics. That's great. But Danaher is a small, it's not that big a company. I don't know, was it 17 billion or so? It's a company that grew out of a REIT in the 80s that reinvented itself. It's not a long-time manufacturer, but they're very dynamic. And of course, under Culp, they reinvented themselves into healthcare, into the exact businesses that we're talking about divesting right now. And if we're on one half of the analysts are saying we didn't move fast enough to divest healthcare, announced in June or July, and we still have it now, there's a pretty good chance Culp's going to keep it. We're going to wind up celebrating the guy who didn't sell what could be a real gem. So I think
Jeff,
that
just a couple of things. I know you have this thing going back and forth with Trian, and it's been a terrible investment. I don't want to make any. And by the way, we were saying clearly it was not. They were not behind this, from what I understand. It was to the extent members of the board who were frustrated with the pace of decision making, but they weren't in the 40s or 50s. I think they're sort of mid-20s. Is where their average price is. They did sell some stock. Again, it has been a very poor investment for Trian.
I think they bought in the 30s, but yeah, somewhere.
Their average price is somewhere in the low to mid 20s, which, by the way, is still horrible. But I did want to make that point.
They got it up to 30 there. That was their big gain.
But listen, it's been just straight down for a long time, guys. Jeff. The dividend, and Bob, the dividend is likely to be suspended, I think, is a fair point here. There's many people who believe, given the impairment charge of $23 billion, that the rating agencies are going to have a very hard time maintaining their current ratings, and therefore you're going to have to see a response from the company. Bob, I guess question to you, if the dividend is suspended in some fashion or dramatically reduced, do you think that's going to hurt, or is it already kind of being accounted for?
I think it's in the stock. I think it's in the stock. And don't forget, this $23 billion is goodwill. It's not cash.
Right. Although it does point to the Alstom deal being yet another in a long line of deals in which the previous management team overpaid for assets they bought and, of course, got underpaid for assets they sold.
Without question, at the same time when they were buying stock back at $20 and $35, and not paying off any debt and not paying down on any pensions or anything.
Right.
Bob, I'm just wondering, Jeff has come out in defense and in support of Flannery, and he did make a number of moves in a relatively short period of time to try to turn around the company. Do you think this was a GE problem or a Flannery problem?
Well, it's hard to. I can't answer that question. They use these terms. He wasn't moving fast enough. I don't know exactly what that means, because I agree with Jeff. If you were to put the three of these people together, look at their backgrounds, and look what they are, you would say they're like exactly three musketeers. Right. And you would take any one of them, to do something like this. So what about Jeff? I mean, Flannery is never appeared to me to be a guy who people don't like. Once you talk to him and know him and so forth, so it has to be something that we don't know about here that was in that boardroom that took this action. I think they picked two very good people, to be heading up the company. But Flannery was a good person himself, so there we go.
Right. So, Jeff, it gets at the question of whether GE is salvageable and what sort of steps need to be taken now. I get that clearly the market wants to see an outsider. Maybe the problem is he was just a long-time insider, and they've got a credible outsider. Now what needs to happen?
Well, aviation. Oh, I'm sorry, Bob. Go ahead.
Oh, no. Go ahead, Jeff.
Well, they've already
announced.
They've already announced what they're going to do, and it's a complex situation. They can undo it. I agree. The healthcare may look much better now than they thought it especially when the slowness. They just keep having negative reports on power. That's really what's killing it.